Probability is an important element of any trade plan. We'll talk about that a bit later on. Hi, my name is Richard Lee. I manage the stockradar.com.au website for you, where we generate high probability signals to create a trading edge. Okay, we have our trend intensity indicator to guide our probabilities for us. We have trading centres, systems, processes, all designed to work these trading probabilities for you. There's no guarantee, and even something more likely to happen than that's going to happen. So this is what we're always trying to do. So feel free to take a trial and test what we do and have a good look at how we work. So firstly, we're going to go straight into the markets. Our normal view is to just go through the overseas markets, look at the ASX 200, look at the Stockradar portfolio, just some ASX stocks, and we go through trading tactics, and then we're talking about these probabilities a bit later on. Okay, so let's go straight to the markets and look at the Dow Jones. We have had a topsy-turvy week, up, down. It's getting very hard. A little bit of nerves here. We've seen the Dow come down a bit. It's still holding up. You can see some selling occurring down there. The price is coming to ease off. So there's not enough buying to hold the selling at the moment. And here we come down to a bit of a test. We've got a test here at the trend line, or sort of a trend from the moving average, and the S1 support down here. Now we've seen something like this happen a bit before, where we've tested this average, it's bounced back. So we're not too sure what's going to happen yet, but the sellers are certainly working this market over the last couple of weeks. So that's that's the way that is at the moment. The Nasdaq, it seems to have been stronger. It seems to be holding up very well. There's not enough evidence of selling there. So the techs are still getting huge demand from the moment. And I guess, we had a little bit of nerves about a new variant coming in. Again, the technical stocks seem to benefit from those sorts of things. So that's probably why this is a little bit stronger. Anyway, so that's the indices. We'll go through the commodities quickly. Not so good. Copper's, again, still trading in that range. We're down here at the moment. We're still within this range here. The sellers are certainly working this market over at the moment, but the price hasn't had a lot of effect. So this may just end up being a corrective phase. But for the moment, we're pretty neutral on copper, just watching that for the moment. Same with Brent crude. We've had a little bit of a thump down. We had a kick of a rally. Then we had another thump down this week. So we've got plenty of selling. As we saw this all last week, the selling certainly testing this market. And now we're starting to see the price push off. So now we've got S1, a bit like the Dow, we've got S1 just below here, just holding the market at this stage. We may be in for a further correction. We'll have to wait, but the sellers are having an effect now. It hits and momentum slows. Okay, let's go across the gold price. So this one really hasn't done much for us over the last few weeks. It's just been going sideways. Once again, we're seeing the selling pressure come down, another lower high here. So this S1's pretty important, but it's holding the market for the moment. So again, a bit like copper, it may still hold, we don't know. It's just a little bit of an uncertain market at the moment, so trying to predict the up or down makes it very, very hard. The probabilities are really a 50-50 case at the moment, not where we like them for our trading. So that's the commodities at the moment. Let's just go and have a look at the XJO, the ASX 200. It has been a good performer, but we're just going to watch this a bit carefully at the moment. We broke to new highs. We haven't kicked high as we would hoped. We've now got a slightly lower high, which would be confirmed by a break of this S1 level down here, which is the old high. So if we do break down through here, that could be, we could see a correction come about. We haven't done that yet, so don't worry just yet. We've got momentum slowing down. That's normal because this is going sideways. So we are in a mid-range at the moment. We can't really predict where we're going to go. The probabilities are still on the upside until we're told otherwise, and that break of S1 will tell us a little bit of a different story there. So that's the XJO. We have had a big down week on our stock picks this week. We lost 7 stocks, down to 66 stocks of 188 covered. That is, there's 167 stocks and 21 ETFs. The 5-stock portfolio is down to 4 out of 5. The 10-stock is down to 8 out of 10. And the conservative portfolio has dropped 3 stocks last week, down to 6 out of 20. So that's a little bit of a change there. And our sectors are still as strong. The internet and the property stocks are there. Again, we've had some bumps and ups and downs there, which is making it difficult. Some of the rotation going through the market is quite dangerous or quite sort of a worrying at the moment. A bit of volatility going on. So we've got to be a little bit careful. It's a weird market with some dangerous rotations. Building our portfolio that we started in March is up 13%, so we've been up to 15 or 16 or 17%, but we've come back a bit. This is what happens to the portfolios. They will come up and down, but we're looking for a trend and holding that price. This is our controlled conviction, and we still have Computershare, Car Sales, WiseTech, Instantec Pivot and Orica sitting in there at the moment. And remember, these are compounding portfolios with dividends reinvested. Okay, so that's the ASX 200. That's how that looks at the moment. So let's get straight into some stocks. And again, We love looking at JB Hi-Fi, not really, but we're doing this for a purpose to so you understand how I look at the market. And again, we've seen these sellers starting to hold sway again. And then we had another rally here, we've got another lower high here. The selling's a bit here, it's really a little bit indifferent here, but we'd probably expect it a little bit as the real main players are probably a bit neutral at the moment, waiting for this to resolve itself. So this sideways trading range, until we resolve, we're not going to be touching this one here. So JB Hi-Fi, the trend intensity is sagged a little bit again, which at this sort of level is a bit of a worry. So we just hold our fire for JB Hi-Fi. Now let's go to Goodman Group. Goodman Fielder is an old stock from a long time ago. Goodman Group, the property stocks have been doing reasonably well at the moment, and Goodman itself has been in a good space. And it's been doing very well. So we've had a new high broke up here back in May of this year. We survived this route here of selling. We're now making new highs again. Trend intensity rating is +9. This is probably one of the better stocks in the property sector at the moment, but it is looking very good still, holding well. You see there, about line of best fit trend line that I normally draw usually follows the line of the moving average, which gives us an idea of where we're going. So we've got plenty of green bars here, which is good, and momentum is again on the upside here. So we've got a good trend intensity rating of 9 for Goodman Group. So that's an interesting one. Now we go across to QBE. I've had a few people ask me about QBE, what do I do? It's been frustratingly slow, and that's what happens sometimes at the start of these trends. We haven't quite got all the sellers out of here yet by the look of it, but the buyers are holding sway. Again, we've got this new break up here, which we survived a little route here. It rallied quite strongly, and now we've gone sideways for quite a few weeks. That's been very hard, but we're holding the line. We've got our line of best fit here above our moving average. They sort of sit in the same space, giving us an idea if there's going to be a breakdown. So we look here, around here. We've got S1 down here. Support above here seems solid at the moment. Volume's been a bit indifferent. Momentum softens, although it is staying positive. So the outlook here, I've got up here, you've got a trend intensity rating of 7. Which means the bull case is still valid, so we hold on to there unless our stop goes off. So it's been a bit of a trying one, this. We're hoping for this sort of rally. Hasn't quite got on board yet, but at least it's not going back to that $10 level where it was before. So just keep to hold your fire with QBE and keep the faith. Okay. Now, we've had an interesting breakup with Amcor recently, and I just want to show you this one because I think I talked about this in one of my newsletters at some stage. How we had this huge big trading range back from 2016 that we eventually broke out of. A lot of tops across here. So when we get a break, we think, okay, this is good. And it fired off really well, looked fantastic, looked like we were going to go to the moon, but not quite happening that way. It came back pretty abruptly, and we can also see there was a bit of volume here, which brought it back. This is the big range that I'm showing. I'm just going to zoom in on this last area for the moment. We still see a trend intensity rating of 7, but I'll just blow this up a little bit bigger so we can have a bit more of a look at it. Okay, so we've got the break up here. It went up swimmingly. It came back very quickly on a bit of volume. It has held our stop at the moment, which is just about testing, I think, today. So it will be an interesting week this week to see if it finishes off. This is an exciting and decisive break to new highs from a lengthy trading range. So we hope and we look for this to continue on. That's a probability play, not always happening. So we've got to make sure we protect any correction that comes, an untoward correction that we're not expecting. So we just need to manage this trade now just to make sure we don't let it disappear back down to S2. It may happen, I don't know. We've got a good rally here. It came back, it's rallied again, created a lower high here. So that's a little bit of a worry. And we're just really testing this stop level down here at the moment at around $16. So at this stage, you can see the momentum is slowed. The sellers are starting to challenge us a little bit. So we'll just wait and watch from this one. But it is struggling a bit, Amcor. But it is a trade that needs to be managed to make sure we get the proper outcome and we don't let losses get too big in this case if it does break down. Okay, so that's Amcor. That was a nice new high, but hasn't continued on as well as we'd hoped. Okay, I've got a couple of miners for you at the moment. Again, we've got to be a little bit careful because it's quite a volatile little world these days out there. But this is a fairly simplistic view of Pilbara Minerals. It's had a little break of a high here, broke some new highs. So we've just moved that back to there. It's broken to new highs. The volume has been very good. Momentum is very strong and very high in the range. We've got a general upside here, but I'm just trying to trade the momentum moves. And at this stage, we have a good momentum break here. It's a trend intensity rating of 10 because it's above the average, volume is good, and momentum is strong. So in this situation, there's only one choice you can make: is you buy it, you hold it, and you work with the stop. Okay. And again, you know, with the mining sector stocks, especially the smaller ones, although this is a growing one, I know, but you just got to be a little bit careful because sometimes that 15% stop can be a little bit difficult. So sometimes you might want to widen it and lower exposure. That's a way of just minimising your risk again. Because sometimes these stocks can be a little bit jumpy. Anyway, that's Pilbara Minerals for you, and there are a couple of other stocks that are starting to do this again. I want to talk to you a little bit about Lynas today. Lynas has been an interesting stock that's been a very good performer of late, and I just want to show you what's happened with Stockradar with Lynas and how it's performed. Okay, first off, we've got a huge breakdown here back in July of 2020. We had a beautiful trend up here, and you can see there was about 146% profit between the start of this one and where the trend ends. This is where we got stopped out up here. Okay, so entry here, exit there. So we've got a good profit there, but then it makes a new high, and we always buy a new high. Okay, and then in this instance, we bought the new high. It looked like it was going nicely, but sure enough, a thump back down, which took us back out of our stop, and we actually lost 15% there, which is okay. That's the way it works. And here we are again now. So all these signals were fairly valid signals. You can see this one here, good momentum, volume up there. Then we got stopped out. Here we go again. We've got some volume. We've got momentum kicking higher again, and the price kicking higher again. So far, we're up about 5%. On this one here, we've got our stop in place. So again, it's just a matter of playing those odds, playing the processes, repeating the procedure. Don't worry about anchor bias that you lost a little bit the last time. You need to go again if you get the signal. You must stay true to your trade plan. Okay, so Lynas is an interesting one. We'll see where that takes us. But again, I feel fairly safe and relaxed about it because I know I'm always protected with my stop loss. Okay, or maybe stop profit, whatever it might be. Okay, so that's Lynas. Its trend intensity rating is 9, and it looks really good at the moment. So we will just follow that one, hopefully higher. Okay, the other one I want to look at here in the mining sector is Oz Minerals, which we had a huge run with in the last year or so. Let me just put this down a little bit. Okay, so we can see a big run from about 10 to about 23, 24. That was our big trade here. We locked in the profit because it went down. We protected that. Stand aside, be neutral, wait to see what happens next. It sort of went sideways, maybe a bit down here, but nothing too much. But you can see also down here that there's quite a lot of selling that was coming in through here, but it's actually been absorbed pretty well. It hasn't had an effect on the price like crude or something else. So when I see that sort of thing, it means that selling is being absorbed, and that's a good sign. So I'm building a picture that this may well be coming back into the fray again because the selling's been absorbed. There's been a lot of selling there, taking advantage of that huge run up, but the buyers are keen and they've ramped it up again. And we're just looking, I don't know what it's done today. This is Wednesday today. I'm coming to you a day early. I'll release this probably tomorrow, just because I've got other things I've got to do tomorrow. But this is what Oz Minerals is doing. I'm not too sure to say what it's done today, but it looks like if it does break to a new high, it will give us another signal here. Momentum is positive. Volume's a little bit indifferent at the moment, as we hover around these highs here, but we're above the average, and that's important. I'm going to talk about these moving averages a bit later on. Okay, so Oz Minerals, it looks interesting. We've got Lynas, we've got Pilbara, we've got a few of these stocks starting to go again. We know why BHP is so weak because of this dual listing unwinding thing. And some of those other big miners have been a bit negative as well. But these smaller ones, not that Oz Minerals is a smaller one, but some of them are still doing okay. So we'll just follow the ones that tell us when they're going to go up. Trend intensity rating is neutral at +1 for Oz Minerals. Okay, now quite a lot of people have asked me about Elders. A lot of people are very keen to get into the agricultural sector, and it's quite hard on the stock market. There's a lot of stocks that aren't really doing all that well. One stock that is doing well is one that my father bought, I think, which is Rural Funds, and he's old and wise and quite a smart guy. Anyway, now I'm looking at Elders, and Elders is actually, as we can see here, we've had a fairly big ramp up here in 2020, a good re-rating of this stock, but since then, we really have been going sideways. Okay, the trend intensity rating is -5, which is not so good, but we see these highs here. It's trying to get above these highs, but it has too much trouble. There's been too much selling. And now here we're starting to see the selling ramp up a little bit here, and we're now down to this, moving down towards this S1 level, which I don't really want to see break. If that breaks, then that really tells me the sellers are getting on top. and the buyers are withdrawing. So for the moment, the battle still rages. The sellers are starting to dominate. You can see momentum is waning badly. So we may have a little struggle. We may have to correct a bit more before the stock is ready to go again. So that's for those that were inquiring me about elders. For the moment, I'll just be holding fire on that one and just waiting till I get a new high or a trend reversal from lower levels, whichever happens first. Okay, now one stock that's been a good stock to us, a very quick stock, but it's come back a little bit the last couple of days, last couple of weeks. So we just got to watch these ones. So these are the stocks we've got to watch. We had a beautiful little building pressure here, building demand here. Pressure was released. This went up very, very sharply, very, very quickly. From our entry at around about $27.50 up until nearly $40. Now it's come back a bit to about $35 today. I'm not too sure what it's doing today, but now I'm in a situation where I need to be careful. I've just made about 25% in about 4 months. So I've got to make sure if you annualise that you can work out what it's worth. But I need to protect that and not let it go back away again, because that's the way I trade. So if my stop goes off and my stop is set around this sort of level, you'd have to go to the trading centre to find out where it is. But if it does go off, I will protect my stop and get out. Now this may only be a short trade, but I'm a momentum trader, remember, so I'm in for the momentum and I'm out when the momentum goes, no matter how big or long it is. In this instance, we would love it to go higher, but it won't. So we can see here there's a couple of long bars at the top here. There's some selling at around $40, and now they're starting to get a bit more confident. And we can see here there's a huge jump. This was excellent volume on the upside until this happened all of a sudden. So we're just going to be a little bit careful about that. All we really need to do is find out where our stop is and where the price finishes at the end of the week. If it's below it, we get out. If it's above it, we stay in. So IEL has been a good stock, an education stock, and you would think in that business there's plenty of demand. So we'll just wait and watch. Okay, so that is the stocks I want to go through today for you. I know there's plenty more there for you in the trading centre for you to have a look at. But now what I want to do is I want to go to my little probability play, my moving average. I talk a little bit about moving averages today, and all I do is probabilities, and moving averages really are about probabilities more than anything. My other sentiment indicator is a little bit different. So when I look at this little graphic I've got here, a high probability of one thing happening over another. That's what I'm always trying to play. If the odds are like this, I don't play. If the odds get like this, I do play. Now, if you look at this one, I don't know if you're people who are card players or what you are, but what is the colour, the next colour likely to be drawn when you look at this picture? And I'll leave that one with you, and it'll be interesting to see what answer you come up with. But it really is about probabilities, and you should know the answer to that pretty quickly. Okay, so probabilities, play. Types of moving average. I'm going to talk about moving averages today because they take up one part of my trend intensity rating system, and they're an important part of sentiment measuring. There's 3 types that I look at. There are more than that, but these are the 3 main ones. The exponential moving average, each preceding day progressively gets less weighting. A simple moving average is purely an equally weighted set of average of a set point of periods. And a weighted moving average attaches most weight to the latest data. So they're all a little bit different, but there are others like displaced moving averages and adaptive moving averages and all sorts of things. I like to look at the exponential moving average. Why do I look at the exponential moving average? I just like the way it reacts. I've got to know how it works. We're friends. We understand each other, and I don't want to chop and change my moving averages. You can see here from the graph that I've got here, there's the exponential moving average in the red there. You can see the weighted moving average in the blue and the simple moving average in the green. Now you can have a look at that. They all behave a little bit differently. At certain points they say the same sort of thing. At the moment they're saying a similar sort of thing at this stage here. They're very useful. There's not a lot of difference between them, but you've got to choose one over the other. And I just like using the exponential moving average, so I understand how it works. So it's a very good setup, and you see here this when you get these trending periods like this, you'll find that with these lines will follow up like a line of best fit trend line, and which gives me a very good strong case for the trend to continue until we start getting this situation, and I'll talk about this a little bit later on. But I use exponential moving average. Okay, confirmations of probabilities. I use very, very simple rules. Now you can make all sorts of rules, but I just use, if it crosses above the average once, it gets a rating into my trend intensity index. If it crosses twice or more, it gets double the rating. So all I'm saying is if it just broke it a little bit, it gets a bit of a rating. If it confirms it with 2 day or 2 weeks above, then I've got a really good confirmation. So I'm all looking about confirmation of probabilities. And again, you can build a lot more rules into this, but I don't really want to do it because you'll find you'll start getting into exceptions and all sorts of confusing situations. So I keep my things really simple as to what I do, and then I weight all this into the index. So to the eye, the trend following attributes. Now you might have seen this chart last week on CBA, Commonwealth Bank, and you can see here the moving average goes up here, and the trend line, or the line of best fit of the trend, is running alongside or at the same angle, more or less. Okay. Now we know what happened with CBA last week, and it's down again a bit this week. But we don't really know what's going to happen. But this is a moving average. It's a trending tool. And here it's telling you it's flat, and it's telling you it's not trending. Here it starts to turn up, and then we get a break, and we get all those trend intensity indications that help us. But the moving average on its own can be quite a useful trending tool. So if it's flat, you're probably finding the market is rotating sideways, okay? If it's turning up or down, you may be starting to a new trend. If it does, you'll find it will start trending, and then you'll get this line of best fit trend line you're able to draw up, which will be roughly coincide with your moving average. So it's really just about probabilities of the likelihood of it going up or down. Here the probabilities changed quite considerably, and we got out. And it wasn't just the moving average, there was a couple of other things that we use as well with our trend intensity indicator. So the values that I use up here, the X and double X, or the value and the double value, they're all weighted into my trend intensity index for the stock, the trend intensity rating system for the stock. They are a part of my puzzle, okay? They are simple and uncomplicated and clear and workable because the rules I use are very simple and easy to work. Okay, so that's really just a little bit about probabilities, a little bit about moving averages, what I use, why I use them. I use a 28-period exponential moving average, and that's what I stick with, and that's what I find I like and how I use it. Okay, so that's about all I've got for you today. As I said to you last week, the newsletter was out yesterday. We show you all our open positions at the moment and discuss the profile of how a portfolio should develop and where your big trends should be and your big profits and where your small profits or even your losses should be. Okay, so I talk a little bit about that. The radar's rant, as I said, give yourself a break, take a step back and see what's real, and that's talking about going from daily to weekly. If you're in a hurry, you might trade daily, but it also can be a faster way to lose money. Okay, don't forget to check our blog. It's free and fun, and that's a bit of fun. So all I really wanted to say to you today was be careful out there. The market is a bit weird at the moment. It's rotating quite a lot between sectors and between different stocks. So just be a bit careful. You'll note that I've cut back my stock picks quite a bit over the last couple of weeks as I just lock in profits, take some small losses, just take my exposure a little bit lower. So good luck for the trading week. Thanks for listening today. I hope you all learned something today, and I'll see you all next week. Okay? Thank you.